Ron from Ronald Rohde Law, and today we're going to be talking about adding value to your multifamily investment. As a lawyer, I come across these types of questions at least once or twice a week. People come to me, they have their own funds or maybe pooled with others, and they want to invest in a value add Class B and Class C multifamily. Are these deals still around? Watch the video and find out more. This video is going to look at one of the most popular ways to build equity when you're starting in a commercial real estate investment. And the formula goes like this. You find an underperforming asset, whether it has low occupancy or charging below market rents. You spend a little bit of CapEx per unit, maybe $500 up to $3,000 per unit, putting in improvements, paint, flooring, new countertops, maybe new appliances. You put the CapEx in, you're able to raise rents on the vacant units, and then as other tenants vacate, you upgrade those units. Finally, you sell when you've increased the NOI. And this is just such a common formula that I see it played out all over. You know, the gurus, YouTube videos, everybody's talking about this formula as a very easy way to increase equity, forced appreciation. But the purpose of this video is to find out, are there deals still available where you can do this? Because it sounds really nice on paper, but the reality is, are you able to execute and make this money? For most of these deals, it's a seller's market. Here in Texas, we have multiple offers on every single multifamily that hits the market. And when I say multiple, we're talking 5, 10, maybe 15 offers on a multifamily property, each with varying conditions and each with higher and successive price per unit. The reality is that it's very difficult to find a deal that still fits your metrics. However, I think that the key to finding a property that you can invest in and buy with confidence is to figure out your unique advantage. And what I mean by that is there is one thing or multiple things special about you. There is something unique about your relationships, your access to capital, your access to debt, or something unique about you that's in relation to the seller, why they would choose you over another buyer. And the point of this video is that my best clients, I might have 5 or 6 people all coming to me with the same thing. They have a few million, they're looking for 250 doors. What do I recommend? And it's very hard for them to find product. But if you can identify what your strength is, maybe you're from a specific area, maybe you have something in common with these types of mom and pop sellers that can really relate to them and speak to them in terms of buying their property. Whatever it is, find that unique advantage and really leverage that and focus on that to the exclusion of everything else. I think that's really the key for different angles of approach. Do you have a sophisticated acquisition system? Are you dialing for dollars and are you picking up the phone and talking to people? Whatever your unique skill is, leverage that to the hilt, and that will help you win properties. Thanks for tuning in. I hope this was helpful. As somebody who talks to a lot of general partners and sponsors for multifamily value add deals, they're always in a very competitive space. But my observation as a lawyer, I think that the forced appreciation model for value add for Class B and C is very tough. But if you can find what makes you unique, whether that's no financing, whether that's a very quick close, whether that's money hard on day one, that is a strong enticement to the seller to take your offer over somebody else's. If you're interested in more commercial real estate content from the legal side, hit subscribe and we'll see you next time.